Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday, 27th September 2021. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist of my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, USD JPY, GBP JPY and many more. So let's get started. So this is the Forex chart of gold USD in front of us right now, and as you can see that yesterday gold closed at 1750, and if you have been watching my videos, then you know it very well that 1750 is a very strong support for gold for quite some time, and gold has just closed at the support zone. So apart from this support of 1750, okay, we have a very strong resistance at 1780 to 1790. Yes, 1780 to 1790 is a very strong resistance zone for the market that I have marked here. And the zone of 1740 to 1750, keep in mind the 1740 to 1750, this is the support zone for the market. So these two are the most important zone or the support and important resistance level for the gold USD. And you can see that I have also added a line here, trend line, and you can see that apart from this resistance zone, we also have this trend line in the form of resistance. So whenever market was trying to go up, this trend line was acting as a dynamic resistance for the market. So we have got one support zone at the bottom, and we have got two resistance at the top in the form of trend line and 1780 to 1790. So this is the overall structure of the market right now, and we saw yesterday that though market was struggling near the support zone, but somehow market managed to close above the support zone, so which clearly gives us the confirmation that 1750 to 1740 is still a very strong support for the market. So my dear friends, if you already have a long position, buy position on gold, then you do not need to worry. Just be on the trade with your stop loss below 1740. Yes, you can be on the trade with your stop loss below 1740. And if you are planning to enter on the market again, or if you are looking for a fresh entry, then my dear friend, you just need to focus on the chart of DXY as well. If you have watched my other videos, then you know it very well that I extensively talk about the chart of US dollar, because it has got a huge impact on the market. And as we all know, when dollar goes up, gold goes down, and when dollar goes down, the price of gold goes up. And you can see that dollar is an uptrend right now. Yesterday when dollar was struggling here, I told you that this is a support zone, and ultimately dollar broke the level with a huge candle, a huge candle. That was a clear-cut signal that bulls are still present in the market. So there is a possibility that after the market opening on Monday, okay, US dollar will be coming down. Okay, it will coming down a little bit for retracement, and it has a support at 93.20, and it will take support and bounce from here. Listen to me carefully. After the market opening, there is a possibility of US dollar taking support here and bouncing. It means that taking support at 93.20 level and bounce, and it also has a support in the form of this trend line also. So US dollar has double support here. Therefore, when dollar will be bouncing from the support, double support, then the price of gold will be going down. Okay. And on the other hand, if dollar starts going up from here, then we will see some buying on the price of gold. But right now the possibility of US dollar bouncing from this level, support level, is quite high. So keep your eyes on the chart of DXY. So if it bounces from the support zone, then definitely price of gold will be going down. And on the other hand, if dollar gets very bullish, then again gold is going down. Okay. So until and unless US dollar reaches 93.60 level, we do not see any sort of trend reversal on the market right now. Okay. So what should be a strategy for gold then? Okay. The strategy is simple. As I've already said, if you have already taken a long position on gold, then be on the trade. No need to do anything with your stop loss below 1740 level. Okay, your stop loss will be below this level. And if you are planning to, okay, if you are planning to take a fresh position, you are looking for a fresh entry on gold, then wait for the market to open. When the market will open, just look at the price of US dollar. Okay, if you find dollar going down, okay, if you find dollar going down, then you can enter on the market immediately. But just keep in mind that when dollar will be bouncing from the support again, you need to exit from the trade. The goal may be here doesn't matter, because when dollar will be going up, then definitely gold will be going down. And in case there is a heavy selling on the price of gold after crossing this level, then you can also short the market, because in market there is a theory, okay, there is a theory that if you see market testing a level too much, then definitely the level loses its strength, and at one point of time the market breaks the level. So market has been testing 1750 for quite some time. So there is a possibility of breaking this level also. Breaking the level means when dollar will be very strong, dollar will be bullish, gold will obviously break down. And you can short the market. You can short the market below 1740 level if dollar gets very bullish. And on the other hand, if gold starts going up, then you will get a good position to short the market at the resistance level. But right now, you just need to focus on the market opening. That's it. Okay, market opening. So if you are confused right now, let me speak again. If dollar goes down on Monday after the market opening, you can go for a fresh position buy. As long as dollar is going down, you can be on the trade. Okay, so when dollar will be bouncing from the support, when dollar will be bouncing from the support of 93.20 or the trend line, then definitely you need to exit from the trade. And if dollar gets very bullish on the market, then there is a good possibility of going US dollar going up if it bounces from the support, and gold will obviously will be going down. And if gold breaks the level of 1740, then wait for a couple of hours and see. If you see that after 4 to 8 hours, 6 hours, market is trading below this level of 1740, you can short gold. You can short gold if dollar is extremely bullish. On the other hand, if dollar goes up from here, you can also get a shorting position at this level. So this is the overall scenario of gold USD right now. So my dear friends, for trade with proper analysis and proper what's it calculation, follow proper risk management. And this is the forex sentiment meter. In the Forex Sentiment Meter, you can see that you'll find the Forex Sentiment Meter on my website avilashazarika.com. In the Forex Sentiment Meter, you can see that 72% retail traders have taken long position and 27% retail traders have taken short position. And as we all know, 90%, more than 90% retail traders lose money. And the main reason of losing money is that they fail to understand the sentiment of the market, they fail to follow the emotion of the market, they fail to follow the trend. Right now dollar is bullish, so there is a good possibility of gold going down, market breaking the level of 1740. So my dear friends, my only request is use proper risk management. Do not risk more than 2 to 3% of your trading capital. And my dear friends, I have launched the Pro Trader membership program last month, where I share the best trading opportunities on the market. If you're interested, just go to the Pro Trader section on my website. You will get all the information. So bye bye, take care, see ya on Monday again.